We're here to talk about a super important topic, enterprise blockchain. Now, those are two words that we've been hearing about for about a decade. And I'll be honest, from my perspective, folks, well, it's been a little bit disappointing. We haven't seen nearly as much progress as was promised in, well, some of the talks that CEOs of Fortune 500 companies were giving, some of the consortia that were set up to build these private blockchains that theoretically would have lots and lots of transactions and users on it. So I kind of want to find out, before we start talking about what's next for enterprise blockchain, Paul, let me ask you this. Why hasn't it worked yet? And maybe we can start by describing why you're qualified to answer the question.
Sure, everybody. So hi, I'm Paul Wer'e, Global Blockchain Leader from EY. By the way, you may notice we're missing a person here. Alyssa's not feeling well, unfortunately, so you're going to be missing a little bit of that insight and expertise, but hopefully we'll try to make up for it. So I've been in the blockchain business. Actually, this is my 10th year. Actually got started in it when I was at IBM, like the ultimate enterprise provider, and moved over to EY in 2015. And it moved largely because I wanted to work on blockchain and crypto. And the thing that has really been noticeable, the biggest struggle over the last 8 years, really comes down to sort of two things that are broken about blockchain and why enterprise haven't made progress. Number one, most important one, is this mania for permission blockchains. They don't work. Permission blockchains, private blockchains, you can call them by all different names. Fundamentally, there is no point in having a centrally managed, decentralized ledger. Right? It doesn't work. Consortia don't work. It's hugely expensive. It's technically challenging. But also fundamentally, like, if you could all agree upon one company to do something for you, you could have just started a database, right? You don't need, decentralization is the point, and a centralized system doesn't deliver that.
Okay, Paul, is that necessarily, hold on a second, is that necessarily true? Pat, first, why don't we talk about a little bit of who you are, and then maybe you might have, I don't know, a different opinion.
Sure. Pleasure being here. Thank you to Mainnet. Wonderful conference. Great to be here. Pat LaVecchia. I'm actually 25 plus years traditional finance. I ran global groups at Credit Suisse, at Bear Stearns, at First Horizon, and came into this crypto world, blockchain world, about 4 years ago, and became an OG at MakerDAO. I was part of MakerDAO. I was a senior advisor there to Rune Christensen and Stephen Becker. Stephen's on my board. In a funny way, the MakerDAO ecosystem has a small ownership position in Oasis Pro. So when I started, somewhat counter to Paul's story, I was completely looking at this as tulip mania. I didn't believe it. And then I started understanding that crypto and blockchain were two different things. And then DeFi, became very excited about DeFi and the benefits of blockchain. And that's really what got my juices flowing and why I dove in deep here. Oasis Pro is a global fintech company. We're infrastructure focused. We provide end-to-end solutions and are a solutions provider primarily to major institutions in the financial area.
So Paul, sorry, I should say Pat, given that, why is it then that sometimes a private blockchain could be advantageous?
Well, in the long term, I agree with Paul. Absolutely, public blockchains. But in the regulated market, that's not going to happen in financial world, in my opinion, in the short term. The reason is, it's varied. There are many reasons. There's all this noise in the press, FTX, et cetera. You see hacks, you see names of blockchains you've never heard of that got hacked, et cetera. And the regulators feel very uncomfortable with the public blockchain. So the large institutions that we're working with almost predominantly are examining the public, but really focused on the private today. And why is that? It's controllable. It's controllable. They can run tests on it. They can actually develop a commercial model. And when it works, start moving to the public blockchains. But the regulators, are, at least here in the US, are not there. And it's going to take real time, in my opinion, before it happens.
Paul, what do you think? I mean, I'm guessing you might have seen one or two pilots fizzle out over time. So is it possible it's because they were building on the wrong infrastructure?
So I think it's much more, consortia, private chains, what people do in these chains is they spend all their time fighting with each other over how to monetize the system, what kind of standards to get on, like how to manage the system. It doesn't scale technically, it doesn't scale organizationally, and it's very expensive. And the result is that we actually commissioned Forrester Research to do a survey of 250 companies that implemented permission chains. 2/3 of them said if they were to do it again, they would go on public, right? And
Wait,
here's this.
2/3 of 250 companies.
Yes.
And these are real companies.
Yes, real companies. And this was a stat that really blew my mind. For every one company that was willing to join somebody else's blockchain to this issue of control, 2 companies started their own. There is no way you can build a network business model when the average permission blockchain has 1.5 users. It doesn't work.
Okay.
So if I could add to
Please.
that, again, in the long term, we agree. We're integrated with 13 blockchains, the majority of which are public and public-private, what I call public permissioned subnets. And I think just to be clear, I think our focus is almost entirely financial, and financial broadly defined, right? Trade receivables would fall into that camp. But I think you're referring to many different industries.
Well, and I want to talk about that too. I mean, because very often the focus, and I think it's an important focus and one we can get back to, is on financial use cases of blockchains. But the reality is, while it's no panacea, theoretically blockchain can be used for many different verticals. Paul, you've literally written a book on this.
Yes.
Okay, so can you give us a couple highlights of industries, I don't know, pharma and supply chain, where blockchains are useful? But I'd like the audience to understand why we need blockchain to solve these problems and why, I don't know, a database isn't good enough.
So actually, this is the most important thing. If you think about in the internet era, what we've seen is kind of, I'll call this the golden age of digital monopolies, right? The buyers and sellers, when they get connected through whether it's ride sharing or e-commerce, what eventually happens is network effects make these centralized intermediaries into monopolists. And so we need decentralization because if you want to transact digitally and you don't want to wake up one day and discover that you're just a taxi company in some other firm's ride-sharing world, you need to do your digital business in a decentralized infrastructure. So that's the critical reason why even in industrial applications, decentralization matters, because otherwise you're going to end up the victim of some kind of central market intermediary monopoly. And once you get past that, really, almost no company is an island. Almost everything that we buy, everything that we use is one company buying stuff from another. And so all B2B transactions are ultimately, I think, candidates for implementation on a blockchain under smart contracts. So it can be supply chain management, procurement, insurance, pharmaceuticals. And by the way, and this is the thing I like to remind people a lot, you don't need the SEC's permission to manage your inventory using blockchain technology.
Okay, so as I said, let's talk a little bit about some of these specific use cases here. Supply chain. Have you actually seen, or has your firm helped implement supply chain solutions that have made a difference for, I don't know, inventory management?
So inventory is a really great example. One of the awesome things about inventory and traceability is a couple things. First of all, you can find out where your product is going. We do, we cover something like 6 million bottles of wine. Every single Peroni bottle of beer comes with a QR code on it. You scan it, it will tell you through EY's blockchain servers where that beer came from.
Wait, right now, if I go buy a Peroni beer?
If you go buy a Peroni bottle of beer, you scan the QR code, it will take you to a web page, and all of those NFTs that track the origins of that beer, that's done by EY's blockchain on the public Polygon Proof of Stake network.
Look at that. Okay, this is now, I would say, crypto's favorite beer brand.
I hope so.
Okay.
So along those lines, it can go even further back. That's in regards to a beer, but one of our clients is actually focused on first growth Bordeaux's. They've been in the business 30 years, and as an alternative investment, not drinking it, this is about taking it, storing it in a vault, climate controlled in the UK. The returns over the last 30 plus years have been approximately 16% IRR.
Yeah, we've seen a lot of private equity investing in things like this before.
So what they're doing is putting everything on the blockchain. So you can actually see the provenance of every bottle that they have in stock, and when they buy and sell, it's all transacted over the blockchain.
And you would want that theoretically on a public blockchain of some sort, no?
Yeah, they haven't selected the public blockchain, but it will be a public blockchain.
Okay, so we're seeing that take off on the supply chain side. Let's talk about pharma. That's another industry that theoretically has been rife with fraud. Also, of course, it's extraordinary concern if, I don't know, your pills are wrong or the manufacturer had some sort of error and then that could cause death.
So actually the Digital Supply Chain Security Act, the DSCSA, which was passed back in 2013, is going into effect sometime later this year. And actually, it's actually driven a lot of pharma companies. One of the things that's holding pharma back a little bit, and this is the critical change that is coming, it's a big area of EY investment, is privacy. So it's one thing to track, say, the origin of a bottle of beer or some wine, right? That is something that, like, Peroni wants you to know where the beer came from. They want you to know that the wheat is organic. Merck or any other big pharmaceutical company, they don't want you to know exactly how many pills or how many batches of medicine. That's material non-public information. And so the problem with public blockchains in their basic format is no privacy. And the biggest priority to make enterprise users of blockchain comfortable is you've got to build industrial strength privacy. Right. And that's been where EY has been doing our research. We've built an Ethereum layer 2, it's called Nightfall. It's a privacy ZK rollup. Public domain, it's a public permissionless, open source network infrastructure. It's running on Polygon proof of stake network now. We're going to deploy it on Ethereum, and it will allow you to move and manage assets on public Ethereum or public Polygon with full privacy.
And so, I mean, let me ask you this. Have you found that to be a challenge when selling in? One of the things I think some of the audience members might need to know is that when you're selling services or trying to build a new product for enterprise, there's a lot of steps here. And eventually, you need to get a number of different approvals. Privacy, especially when it comes to blockchains, has been something that has frightened many a regulator, but also many a chairman. How are you getting around this issue?
So one of the first things that we talked to, and by the way, you're right on, it takes a long time to get public large companies on board with new technology, right? My favorite joke is change is good, you go first. I've heard that from so many clients, right? The reality is that, so I try to remind people of a couple of things. Number one, the internet is a public, permissionless network that started without encryption or privacy. And e-commerce didn't take off until we got privacy right. The same thing is happening in the world of blockchain. Ethereum is a public permissionless network, but it needs privacy for commerce to take off. So first thing I try to remind people is there's nothing new here. Like, this is a very typical technical pattern. Secondly, what I explain is, listen, this technology works, right? It's been around for years. Zcash works. The math works, right? This is trustworthy. And by the way, even if it gets hacked, we never put business data on chain. You only put links and proofs. So there are multiple layers of security. But it takes time to go through all those explanations and get people comfortable.
OK. So let's talk a little bit about these three letters that I keep hearing about, RWA, and what that means for enterprises. I've heard of that, for example, we could see invoice factoring become something that enterprises might use to take out loans. We've seen that collateralization of inventory or future inventory, of course, could be used for all sorts of different purposes. Pat, what are you seeing when you're talking, and I know you are working, can't announce names, but with a number of very large enterprises, what are they asking for?
So you've seen some news about treasuries and money markets. So that's first and foremost a lot of the discussions that we're having. Secondarily is open-ended funds, closed-end funds. So think of the blockchain. The benefits of blockchain for equities really don't exist yet. When everything becomes ubiquitous for blockchain, equities start making sense. But blockchain from a securities or real-world asset standpoint are very compelling when you have a yield. Anything with yield, a REIT, for real estate, or a building that's has operating cash flow that's paid out to their investors. Securities. We're a couple of years ago, this hasn't come to fruition, Paul, because this happens across the board. That's a great idea, but we don't want to be first. We were working with a sovereign nation, and this is really cool. This is factorization, democratization, but government bonds. The government bond area right now is entirely tied to major institutions and major banks. That's it. And there are certain size levels that need to be met before you can even do an offering. Can you imagine emerging markets creating their own exchange for their citizenry and diaspora, that instead of the buy-in being $1 million, it could be completely fractionalized to $100, so that their citizenry outside of the country and inside the country on a project basis can actually invest in the country through their own treasury issuances. So we've just seen a whole trade receivables, et cetera, but that's one example that really hits to the heart of what the beginning of blockchain, in regards to democratization.
Paul, what are you seeing as the most popular use cases today when, I'm going to call it, new enterprises or enterprises who haven't done this before are approaching EY?
So there's 3 ones that are driving things forward beyond financial services. Number 1, inventory management. So now that privacy tech is maturing, companies want to manage inventory. We estimate that if you move your inventory management to blockchain, you can get the same service level with about 20% less inventory because you have more accurate data. Second big one, procurement. Companies are great at negotiating deals. They are terrible at remembering what it is they negotiate. 5 minutes after the deal is done, they're like, wait, how much do we have to buy for the discount? Like, they forget all the time. Imagine taking that stuff, putting it into a privacy-enabled smart contract, and just knowing that every purchase order you make is always being executed at the lowest price that you're entitled to. Like, that's worth real money. And then number 3, the third hot topic is carbon traceability. So the European Union is implementing a carbon border adjustment, right? So if you make stuff outside the EU and it has too much carbon in it, you may have to pay tax to bring it into the EU. The problem is going to be, can you prove how much carbon or how little carbon you have in your product? So we have built an application that basically allows you to tokenize both your carbon offsets and inputs, and to allocate those tokens to product tokens, so you can show not just in general how much carbon did your company output or offset, but very specifically per product, per widget, exactly the full traceability of the carbon in that item. So those are the big 3 hot ones that we're seeing right now, and they're all dependent on some connection to the real world, right? Attestation services, oracles, and then secondly, they're very dependent on privacy because they're exposing potentially sensitive business information about an enterprise, and so that's very important. There's lots of benefit, but you got to get those 2 things right in order to be trustworthy.
Can I just add one thing? And I know this crowd is very educated in this area, but I've been saying this for a while. When we stop using the word blockchain and crypto and oracles, because when I first heard oracles, I was thinking Game of Thrones, like 3.5 years ago. It took me a while to figure it out. And the UI experience is no different from what you see today. And DeFi is not like this, what is it? It's just a part of the system. You're just utilizing collateralization of certain assets for RWA. That's when we've hit it. And I think we're heading in that direction. And by the way, this isn't just my opinion. This is an opinion I'm hearing more and more from large enterprises, large infrastructure players that we're seeing. Right now, we're talking about the sausage, how the sausage is being made, and it's critical. But at the end of the day, does anybody in this room, maybe a handful, know when you do a trade electronically on your phone, what actually happens?
Well, sure, Pat. Be that as it may, I think a lot of us not only care about how the sausage is made, but how many sausages are being sold, and we'd like to see more of those in the future if we want this industry to prosper. But so to that end, actually, Paula, I wanted to ask you something. It's certainly, I'd say, a couple years ago, I read that Fortune 500 earnings calls, the number of times the word blockchain or crypto, but usually blockchain even, was mentioned, was related very closely and correlated to the price of Bitcoin. So when Bitcoin price crashed, we saw CEOs and CFOs say those words, blockchain, crypto, anything like that, DLT, a lot less often. Now that we're in this kind of sideways Bitcoin market for now, are you seeing that, well, there's sideways demand? And next year, with the halving coming up, I know this is a kind of a strange question, but do you anticipate that we'd see more public blockchain interest from enterprises?
So I think what will happen is we'll see more public blockchain interest from enterprise next year, not because of the Bitcoin halving, but because of the MiCA legislation in Europe. I mean, like it or not, and I really want to see more industrial enterprise applications. The fact is, when people talk about blockchains, they're thinking about finance, right? That's like the first thing that comes to mind. They think about finance, and the EU legislation, the MiCA legislation, provides a path for legislation. It provides a path for regulated tokens and real-world assets, and that is just going to be enormously important in getting people comfortable. And it's amazing to the extent that without the finance part being sorted, people, even for industrial applications that don't require any regulatory approval, they still get nervous and they need a lot of hand-holding. So I personally think, I tell a lot of my staff, I say, summer's coming. I don't know when, but it's coming, and I think it will probably come around the implementation of the MiCA law in Europe and this regulatory environment that's positive for crypto and digital assets.
Pat, what do you think is going to be the next thing to take off when it comes to, well, enterprise blockchain?
So I'll divide it up, financial and non-financial. So, and Paul may have mentioned this in one of your other speeches, but Walmart, food, inventory management. There were tests run utilizing the blockchain, provenance, seed to sale of certain products. And in the event of an E. coli outbreak, we often see that in the news globally. And it takes some time, typically here, as I understand it, 2 weeks in the US to determine where the source of that particular outbreak was. Now, utilizing the blockchain and provenance, on the supply chain side, that was reduced in tests at Walmart to 10 minutes. That is real world application.
2 weeks to 10 minutes.
2 weeks to 10 minutes. Very exciting. On the financial side, what I believe will happen in the short term, we've mentioned tokenized treasuries. That's definitely going to be a part of it. Major asset managers, there's a huge push in that area. Quietly, some are making news publicly on some money market instruments, et cetera. I think what we're going to see for asset management is tokenized funds utilizing smart contracts with capital call features, like 40 inputs depending on the GP, LP for that particular client with an SMA that's a separately managed account. And why is that coming out? Because the UI experience to the limited partner will be no different from what they see today. It'll be electronic, but the savings to the asset management company in terms of back office servicing external vendors to handle that ledger is going to be reduced by 25 to 30 bips. That's a tremendous amount.
Paul, final question. What are you most excited about in 2024?
Privacy on public blockchains.
Privacy on public blockchains. Well, you should stop by the EY booth, I think, and get a patch. You're giving them away? Okay. I'm amazed you're not actually wearing one right now. But go to the EY booth and check out these patches. I agree. Privacy in public blockchains is a very big deal. ZK rollups are coming out, and I'd love to see more and more enterprises using them. Gentlemen, thanks so much for this panel.
Thank you.
This is great.